People, if they just think of stocks as pieces of business, they'd be so much better.
So Warren Buffett, he's the ultimate long-term investor, right? And he likes to say that his preferred time horizon is forever. So I think a good lesson for investors, just focus on the long term. Ignore the headlines, ignore any noises, and avoid panic selling.
One, you look at stocks not as pieces of paper, but as businesses. You look at them like, can they withstand competition? Can they continue to earn these profits? Can I possibly forecast that they'll continue to earn these profits? Because that's probably the only way I can really value it anyway intelligently. And the last, don't let the market tell you what to do. And, so I think you have to really know your companies and know what you want to do. Don't just let price action determine what you want to do, because that also lets you buy stocks cheap. So if something's sold off a lot, you don't just assume that it's, I'll say, bad. That may in fact end up being an opportunity. The second one, real quickly, build in a margin of safety. And that's the value side of Warren Buffett. So say, I just can't possibly be that good at valuing a company, so I'm going to put some sort of a conservative valuation on it. And then even if I get a few things of my thesis wrong, which I'm guaranteed to do, I'll still work out okay and I won't get killed. And I think that's it. There's the magic formula.
When you should buy stocks is when you think you're getting a lot for your money, not when you think business is not necessarily when you think business is going to be good next year. The time to buy stocks in America generally has been always, with a few exceptions, because the long-term outlook is exceptionally good, and I don't think you should buy stocks based on what you think the next 6 months or year is going to bring. I've been investing over a period that's probably over 25,000 days. And I would say if you took the headlines from the paper of those 25,000 days, I'll bet a majority of those headlines, they certainly wouldn't be good news or optimistic. I mean, you can start with 1942 when we were losing the war, when I was made the first investment. So the news is usually, it's more often I think the headlines are bad than good, but the Dow was 101 at that time, and the Dow is, whatever it is now, 25,000. So America works, but the headlines are frequently going to be kind of alarmist. If you're investing, if I'm going to buy a half interest in a McDonald's stand and you're going to run it, or McDonald's franchise and you're going to run it, I look to the business to determine whether I've made a good investment. And I'm concerned about, whether we have new competition, how we do over the years. But it's the business I look at. When you're just looking at the price of something, you're not investing. I mean, if you buy something, Bitcoin, for example, or some cryptocurrency, you're not looking to the asset itself to produce anything. If you buy an apartment house, you're looking at how the apartment house does. If you buy a farm, you're looking at the farm does. If you buy a whole business, you're looking at how the business does. If you buy a part of a business, why shouldn't you look at how the business is going to do? But people get charmed by lots of action and the fact that things are liquid and all of that. And it does have repercussions back into the market when you get something like, an ETN arrangement on the, supercharged on the VIX. I mean, where you can lose 90% of your money in one day. I mean, that really doesn't belong with the word investment. I mean, it's a gambling. People, if they just think of stocks as pieces of business, they'd be so much better off than thinking of them as little things that move around in price. And I think with Berkshire, we have an unusual number of people as shareholders who just look at Berkshire as a business. They look at it as a savings account. They put some money in 20 or 30 or 40 years ago. We retain it and reinvest for them, but we're their savings account. And that's the way I look at my own stock.